It's 5 o'clock in London, it's 1 o'clock in New York, 1 a.m. in Hong Kong, 4 a.m. in Sydney, 10 a.m. in San Francisco, and 11:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID Livestream, Series 23, Episode 5. In the aggregate, that adds up to Episode 137, starts here. Very interesting maneuver last week. Bourse of Dubai sold 5% of Nasdaq in a very smooth deal with a modest discount. In fact, more excitingly still, since I even wrote this script, I do believe that the Nasdaq share price is now actually up from where it was before the Bourse of Dubai trimmed their stake, because Bourse Dubai are still a significant shareholder, the second largest in the business. They're retaining just over 10%, a seat on the board, having invested in 2007, and indeed they've signed a lockup, so they won't be selling any more shares for at least 18 months, and who knows, given that they've been a holder for almost 20 years, could be much, much longer. Meanwhile, French President Macron is eager to talk about capital markets union. But then again, after more than a decade within the European Union talking about capital market union, there's been scant progress. Will this change with the new commission? Sadly, I have to admit, ladies and gentlemen, I wish I could say something optimistic, but I'm not holding my breath right now. While the EU is barely talking about T+1, or perhaps they're talking about it, or thinking about talking about it, or talking about thinking about it, that's T+1 I'm referring to. The Indians start T+0 in T+2 days' time. That's going to be happening on Thursday. Just as the rest of us are preparing for Easter, the Indians getting over their wondrous Holy Day holiday, which was at the start of this week. They're moving, having moved to T+1 in January. They're going to be at T+0 with their first 25 stocks on the National Stock Exchange and Bombay Stock Exchange coming Thursday. The T+1 leap worked in January, and now it's same-day settlement looming in those 25 stocks to begin with. Very exciting times. And of course, coming up on, I do believe it's May the 28th, off the top of my head, just after we all enjoy the Indy 500 and the Memorial Day bank holiday, the United States of America, Mexico, and Canada will be making the leap to not quite T+0 yet, but nonetheless T+1. Don't forget, PLY had a little article about that in the Vermiculous newsletter on the topic. You can get that at the Vermiculous website. Finally, for our introductory remarks today, ladies and gentlemen, in London, Aquis Exchange proved the core point of Exchange Invest. We are the supporters of the Bourse business, and they have underlined the strength of the marketplace model, having eked into profit with a scant £16,000 in profit in 2020. Look at them now. 4 years later, the group racked up £5.2 million. That's the better part of $7 million over the course of a year. Huge plaudits to Alistair Haynes and his team, and to everybody out there in the marketplace, creating markets, creating values across exchanges. Now, when we look at those, ladies and gentlemen, that brings us elegantly to this week's guest, Magnus Haglind. Magnus Haglind is going to be talking to us about modernizing markets. And as such, he is in pole position because actually, when it comes to market structures around the world, nobody does it better. Nobody has more installations than Nasdaq. And Magnus is head SVP of Marketplace Technology within the Nasdaq Markets Platform Division. He's responsible for business management, product portfolio strategy across a broad suite of mission-critical market infrastructure solutions for market operators. We'll get to that in just a minute, but as far as I remember, it's something like over 100 different market infrastructures around the world are on Nasdaq. Previously, Magnus Haglind's high-profile roles within the group have included Head of Global Commodities and CEO of Nasdaq Futures. Magnus holds a PhD in Industrial Information Systems and an MSc in Electrical Engineering from the Royal Institute of Technology in Stockholm in Sweden. Magnus, welcome to the show. It's absolutely fabulous to see you today. Where in the world are you today?
I'm in Stockholm, so it's as you say, we're running up to Easter, so I'm spending time with my colleagues here in the office this week, and we had a lovely day today, and we saw a few flurries still coming down on us today.
My goodness. Well, of course, one of the things I always love about your HQ, because I remember being there many, many years ago. In fact, I think I chaired one of the last OM conferences that you had devoted to derivatives just before the Nasdaq merger. You're in the old factory, if I recall correctly, where they used to assemble the Ford Model A for Swedish production in the 1930s. It's a magnificent building.
Yes, that's correct. So this is an old car manufacturing building that they set up in order to overcome some tax issues. So basically shipped parts of Ford cars into Sweden and assembled them here. And by doing so, they could deduct some taxes. So some smart moves at that time.
Yes, it's quite interesting. I mean, a lot of people don't think about these sorts of things when it comes to production, but actually the Ford Motor Company in the 1920s and 30s, they even had production, which a lot of people don't realize, in the, of all places, the USSR. Under Stalin, they actually had a factory building Model Ts, which was opened just shortly before they opened the factory to build the Model A, or assemble the Model A, as you say, in Stockholm, which is your lovely office where you're coming from today. So you say you're in the office this week. That was a very loaded point, Magnus, because I know that you are a man of many frequent flyer miles going around the world, helping with the sales and installation of marketplace technology. Where have you been recently? Any good conferences, events you've been to?
I think the most recently was IPO-VID, which was a couple of weeks ago, and I think that's the marquee event, as many knows, for the derivatives industry. I think that was a great opportunity to meet not just with clients, but with the broader ecosystem and the industry, and learn and listen to what's top of mind.
That's great. And yeah, it's a great event in Boca Raton. Unfortunately, I couldn't be there this year for various reasons, but fabulous to see the overall spirit. Even watching from afar, it seemed to be one of optimism across the derivatives business this year.
No, I couldn't agree more. I mean, that was my biggest takeaway, that the industry has gone through so many kind of iteration of change. It was a lot of concerns about regulation that would hit. It was around the pandemic and the volumes around that. And now everyone is coming around and is very, very, I would say, optimistic about the future. You have the growth in retail, which is kind of a market structure change. You have a lot of macro events which drive people's need to hedge and trade. So, and then you have even more products going from unclear to clear. Than most recently the announcement of the mandatory treasury clearing in the US, that also going to have ramification globally. So overall, a very positive vibe, both in terms of growth in industry, but also the industry's ability to handle kind of regulatory change, and then also the operational resiliency of the broader industry.
Yes, it's incredible, actually. I mean, I'm trying to think back to when I first went to Boca Raton. I think it must be coming up for, gosh, it's a better part of 30 years ago. Certainly I was there in 1996. I think I was there actually in 1995. And you compare whether it's the futures industry, or you compare the capital markets industry or the commodities trading business, any of those with where we are today. And it's a completely different world in every possible respect, but obviously heavily driven by technology.
No, very much so. And I think that was very clearly also in the lineup for this conference. If you look for both the sponsorship, but also the attention to technology, all the big cloud service providers had a very big stage there, Microsoft, Google, and AWS, and also a lot of discussions around how to introduce cloud, and not just evangelists, more how you can move from talking about it to actually realize the benefits. So
right.
And so the maturity around cloud is growing quickly, and that's interesting to see. If you just go back 24 months, it's a very complete different tone, I would say. And then of course you had a lot of discussions around an AI based on the general kind of boom around Gen AI. So I think that's the balance. And the interesting mix here is, of course, that cloud is just a foundation that needs to be there in order to realize the benefits of AI.
Yes, and it's also quite fascinating when you hit on AI, because a lot of people go, oh my goodness, AI is completely new, because they weren't aware of anything until they saw ChatGPT or Google Bard or whatever these different applications are that people are using now in the mainstream for large learning models for text. But well, I mean, Nasdaq, you've been using machine learning and AI going back at least a decade or more in your surveillance systems to great effect.
Yeah, I think, and I think that's the way to think about the maturity around this particular topic. And I think the a lot of applications out there, including, what we typically have done in, for example, in surveillance or compliance. It's the machine learning in the traditional way of thinking about AI and machine learning. It's an integral part of how trading firms manage their algos, how we look for compliance, how we automate workflows, etc. But I think, of course, with Gen AI, the opportunity to drive efficiencies, to create content that is not just based on the model itself is, of course, amazing. But certainly that needs to happen in a controlled way and in the regulatory context that we operate. But we shouldn't sort of say use the kind of Gen AI boom and forget, the overall modernization themes that's happening in the industry right now, because the pandemic in many ways forced the industry to focus on, I would say, duct tape and fixing issues quickly, because suddenly people had to work from home. We had an enormous spike in volumes that needs to be managed. So it was a lot about firefighting and fixing issues. And that basically took a couple of years, as we know, from the pandemic. Now, after that, I would say most, if not every financial institution across the whole value chain is looking now for what is the next strategic move and investment in modernization, and where should we start? And the interesting piece is that, of course, that technology has moved from 2020, where it was at that point, to 2024. So the whole landscape is different, how you approach it. And also you can think about very different outcomes based on what we have seen in other industries too. And I think that's what's complicated for many executives team right now, is how do you value the transformation, and how do you assign some value and strategic when you do your strategic outlook, and how do you assign value to that transformation? I think that's what a lot of the senior execs in many financial institutions are kind of spending time on, how to organize.
Yeah, because there's also this huge reversal. I mean, the pandemic point is very, very well made. And actually what is incredible is how well the industry did, thanks to technological underpinning, such as from yourselves. I mean, it was quite miraculous. There were so many lovely stories of the pandemic. That nice chap whose cat suddenly became a star of the American media as a result of him being the man in charge of turning on the listings on Nasdaq every day from his apartment. And the only thing, the most photogenic thing he had around was the beautiful long-haired cat. And it could have been so disastrous, which is very interesting. It showed how well planned the industry was for that. But I think also you hit upon, there's this massive 20, 25 year cycle or something, which was 25 years ago. It was all just about get it automated. That will help us. It will get costs down. Whereas now we're coming out the other side of the circle, which is, frankly, you can't really reduce costs a great deal. In fact, it always amuses me when you look at people, some users who complain that stock exchanges make very healthy margins of profit out of transacting different instruments. And you would know well from your time running Nasdaq's futures business, you're charging pennies per million for people to manage to transact things, which was unheard of 20, 30 years ago. It was just impossible that people could think about that. I'm speaking today, ladies and gentlemen, with Magnus Haglind. He's the head of Marketplace Technologies. He's the SVP there. He's talking to us today from Stockholm. Please, in order to help us with AI, the generative AI we need to beat is the one that's on whatever platform you're watching this on, whether it's X, Twitter, Facebook, LinkedIn, or YouTube. Please give us a little heart, give us a little love if you can. That helps push us up the ratings, and therefore more people will be aware of this informative discussion. Magnus, let's take a step back for a little bit. How did you get into this wonderful and exciting world of exchanges, given your strong scientific engineering background in university?
Yeah, that's a good question. So I have a background deep background in engineering, and certainly spent a lot of time in the beginning, coming out of uni, on as a consultant to help to drive transformation of at that time, basically the electricity industry in the Nordics, because it was going through deregulation. So, and when I've been through that for a couple of years, I said, okay, I haven't tested the capital market or the financial industry. So that was basically the entry point into this space. And also had a degree in also computer science. That, so of course, to solve computer science problems in this industry was interesting. So I was not part of so to say closing trading floors. I came in just after that, but I was part of the next phase of electronification, which was the globalization of markets, and it was about the whole push to latency, multi-asset trading, and co-location. So basically, moving from the early phases of electronification of markets into what we know markets to be now, which is highly efficient, low latency, and with the market structure we're having today. So, and I had the opportunity then to start in engineering, and then move over to the market side of the business, and basically combine my technology skills with deep understanding of market structure and post-trade. And then after 5 years in the US, I then had the opportunity to take on the role I'm having now, which is basically combining that 360 perspective of engineering, product, and market practitioner in order to influence and build the products and roadmaps in order to help to drive our 100 plus clients' critical market infrastructure on a daily basis. And it's truly a pleasure to be part and be inserted into local, regional, and national and global economies, and be part of the beat of the daily beat of this industry.
It's very interesting because when I've been talking to him, and I spend a lot of time, as you know, dealing with investors who invest into financial market infrastructures, and it's always fun because they come to me and they always say, what's the first thing that I would note that is atypical of the exchange industry compared to, say, other industries? And I always say, well, actually, the pure play trading exchanges are fascinating because we're a big company like McDonald's or Daimler-Benz or whoever that might happen to be. They are essentially global. You find them with offices in 100 and something countries worldwide, and they're absolutely everywhere. It's fascinating because exchange businesses traditionally have been in relatively few countries. And in fact, Nasdaq's quite an exception because you're right across Scandinavia. You've got large offices in London. You've got large offices in the US and other parts of the world. But an incredible amount of that, actually, your presence is driven in many ways by the technology business because you are in 100 different countries or more, servicing the 110 or something, whatever the number is. Andrew's going to be telling me off now, your PR, because I can't remember exactly what the number is. But it's quite incredible because you've got all of these major structures, and you are truly the closest thing we have to a global business in that sense, although the customers of exchanges may come from all around the world.
No, that's the interesting piece to both support and solve the local or national problem of running markets efficiently and cater to what's specific there, but then also at the same time look for how can we reduce the barriers that's there in order for global liquidity to move across markets. And I think that's where we've seen, I think, the big trend during the last couple of years that local markets or national markets are truly looking for how can we reduce complexity in order to attract global participation. And that can be both in regards to APIs, it can be market and risk controls, it can be your co-location practice, but basically, how can you adapt to industry best practice in order to reduce the friction and the cost of trading markets? Because I think that's the interesting piece in this, that it is the mix of local and global liquidity that drives these markets. And it's not just about the liquidity, it's also about the post-trade part of it to ensure that you have all the capabilities in order to attract then global participation.
And in fact, nowhere is that more obvious than suddenly with the T+1 issue, where we see all sorts of people in, for example, Asia being extremely worried because they may only actually have 1 or 2 hours of overlap in the one day that they will be left with to settle, which could cause them all sorts of problems. And we're seeing some fascinating solutions to that coming up. That's not the topic of conversation today, but it's a very good example of how people are trying to cope with those sort of things. And actually, you bring me back to Boca because there were a couple of very, very good points I think were made on the Exchange Leaders panel. And I mean, I noticed Jeff Sprecher was talking about, as you said, 20 years ago, everybody was building their markets to be global. But then gradually over time, these little impediments came in and some element of regulation or possibly outright protectionism or whatever it's been has made it much more difficult to think instantly global in a thoroughly homogenized fashion. But then as your group CEO and overall boss, Adina Friedman, put it, money is still global. So you've got this very interesting kind of contradiction in a way, because it's more difficult to run a global structure, but at the same time, actually, the money is demanding more and more the opportunity to be able to go right around the world in the same way that everybody can see the world from their social media without having to leave the comfort of their armchair, wherever it might be.
No, I agree with you. And if you look into some of the economies that we're supporting globally, I mean, if that is Indonesia, if that is South America or CPAC in general, I mean, it's growing economies, it's growing population that are getting more money to spend. And with a population of a couple of 100 million, sometimes in these countries, of course, when people get richer and they start to invest, that drives a lot of growth in these countries. So, and that of course attracts others into that too. So I think we're gonna see not just people saying, I want to go into other asset classes, be digital or cryptocurrency. It will also be to go into, I mean, say, let's call it emerging markets, even though it's kind of an old term, but I mean, growing economies where you have a young population with growth rates.
Yes, I mean, those countries, particularly where the population pyramid just looks absolutely sensational, as opposed to Britain, or Europe, which is starting to look very, very fat at the top end, and they've got really, really this huge bottom end, which makes them look like in a very, very impressive jar because they've got so much power to grow up. And I think that's a very, very interesting point you raised, because obviously, when you're looking at these markets, it must be very exciting because they have an opportunity to modernize their markets and essentially do what I would call the telephony jiggle or the telephony leap, which was all those nations that just went copper wires, who needs them? Let's go mobile, suddenly find pro rata a huge leap in their economy because they no longer needed the fixed structure. It must be exciting to work with economies, say like South America, perhaps, where you've had a lot of success recently in seeing how they're trying to take that great leap forward. Because after all, it's not just the economy. The actual topography is remarkably forbidding outside of major cities in order to manage to lay things like physical cable and therefore run old-fashioned infrastructure.
Yeah, but it's a very good point. And I think what people are trying to do that is also to drive, basically look for scale, both and to do that on a regional basis, to look for collaboration. I think NUAM is a great example where people come together to say, oh, do we going to spend the next 10 years to basically be local, or do we going to bring us together and basically be more attractive as one entity? I think that's one good example. But then also you have the digital asset dimension too, to say, oh, maybe we should, exactly as you say, maybe we should explore to see how we can push the use of digital assets in a controlled way by trying to digitalize and tokenize, for example, government bonds and others to drive that. Because once again, to tie back to retail, I mean, the crypto boom that we saw a couple of years ago, I mean, it was a lot of people in South America that engaged into that. And certainly you can then think about what other tokenized asset classes can help to drive the next boom there, but then in a more controlled environment.
And it's very interesting. You talk about, I mean, the rush in this case to cryptocurrency, because it always reminds me of, the great move forward with with communism. I mean, Marx and Lenin, they always wrote that it would all happen in a really advanced first world economy like England or Germany. And of course, where did it actually really take off? It took off in places like China, Russia, and all the places that actually were fundamentally not so heavily industrialized. And I think it's the same thing with cryptocurrency. A lot of people thought, cryptocurrency and digital assets will take off in the first world, whereas in fact, it's been emerging markets that have been quick to adopt them because, well, in the case of, for example, Argentina as a state, even 15 years ago, 10 years ago, certainly, there was a huge rush into the likes of Bitcoin simply because their own peso was not a store of value. But you've had a very interesting deal recently. I'd love to talk a little bit more about Nuam in a second, but in Argentina as well, I do believe you're modernizing the CSD, the Central Securities Depository at the moment, which has got to be really interesting.
Yeah, no, that's true. So we have had a good run in South America in general when they've come to the fact now that they are expanding and modernizing their post-trade infrastructure. And it's both from a capacity standpoint, but more so also for attracting more international participation. So we've been working with the CSD in Argentina and had an opportunity to modernize our infrastructure, and actually went so well. So we launched basically 6+ months ahead of timeline. So that was amazing to work with them to do so.
Well, of course, that's one of the fundamental strengths, if I may say so, of the Nasdaq technology set, going back to the OMX technology set. I mean, you have a remarkable track record of managing to launch on times where no names need to be mentioned, but certain other parties have been a little bit more recalcitrant when it's come to delivering technology over the years. And that's all the more remarkable given the 110 installations that you tend to have running at all times. We've got a quick comment from Messy Times. So thank you very much, Chris. Let's be honest. Do you guys really think this whole internet thing is going to last? I'm minded to think of the great Chinese statesman who, when asked about the French Revolution, said it's probably too early to tell, Chris. So thanks very much for the comment. Talk to us about this Nuam issue, because actually we had John Files on a few months ago, who's obviously been doing a great deal of the coordination of the overall business integration. But it's got to be fascinating walking in and not just pitching for one national exchange, which has a certain degree of dynamism within South America, but 3 exchanges that are trying to turbocharge their dynamism through integration.
Yeah. No, we had an opportunity to work with them because we have a relationship also previously with Colombia. So, but what's interesting to see is how the vision have taken time to basically come into reality, and the vision to say we're stronger as if we go together as 3, rather if we try to convince people to connect to our market. So what they've done, I think it's remarkable to say we're going to have one trading platform. We're going to consolidate liquidity to that, but we're going to still allow trading in local currencies and all that. So it's not like we're just going to consolidate and run on one currency. So it's kind of similar what we did in the Nordic countries 10, 15 years ago, to bring together that, to drive scale to one integration point. You basically can reach multiple markets. And it comes with, I would say, a lot of potential national pride that you need to overcome. But when people see the opportunity, and they've done a good job to kind of divvy up the responsibilities across these different countries, and we look forward to see to help and support with the launch, but then also to help with building the framework around liquidity, how you attract that, and how you remove the barriers. And as I said, it's not just about accessing the exchange itself. I mean, you need to have everything else in place as well when it comes to stock borrow and lending and so on. So participants that can come in will sort of say also be able to operate from a post-trade standpoint.
Yes, so many moving parts to manage to put together in one factor. And you mentioned, of course, I mean, the success of the integration of the many, particularly the Nordic markets within Nasdaq OMX, and how that's been fantastic, in particular for building really a very centralized spoke with hubs around SMEs in particular. And actually, if you're watching the show today, do go back to our archives. We had the fabulous Erja Retson talking about the exciting way that Stockholm had really managed to develop as a huge haven for SME growth for all of the region, and actually much, much further afield, listing companies that are as far afield as Malta and all the way throughout Europe. It's really quite an exciting and interesting thing. Let me just allow you, Magnus, to have a chance to catch your breath for a moment. I want to introduce our book of the week at this juncture. As you know, ladies and gentlemen, if you're signed up to our free weekend newsletter on a Saturday, you can sign up to that, by the way, by going to exchangeinvest.com. You can get the preview of what's going to be our book of the week. Our book of the week this week is an absolute classic in the investment cycle, The Black Swan by my old friend Nassim Nicholas Taleb. It deals with the impact of the highly improbable and is an investigation of opacity, luck, uncertainty, probability, human error, risk, and decision-making in a world we don't understand. It's an absolutely gripping read. Nassim's a fabulous writer altogether. It's always been a joy to encounter him. We had a great debate at the Cambridge Union of all places many, many years ago, which was great fun. Fabulous read. That's our book of the week. Don't forget, while you're there, try a 30-day trial to Exchange Invest, the bulletin of the bourse business, ladies and gentlemen. We're giving away 30 days free if you sign up today via exchangeinvest.com. We will welcome you to the world of major exchange decision makers and all those other people who are at the water cooler of the bourse business. Moving back, Magnus, it's fascinating when you look at the way your technology, and I mean, you alluded to this earlier on, operates truly all the way around the world. And yet, obviously, that must make it difficult because we're always looking at the issue of modernization, let alone how different markets operate in remarkably different ways, even within the same asset class. What do you think are the most exciting things that are coming up on the horizon at the moment? Or what are the things that people are looking at? Or what were they talking about at Boca Raton recently?
Yeah. So once again, I think I want to go back to how we can look fundamentally different on the infrastructure going forward. And I would say cloud will be transformative. And I think it's not cloud in itself. It is the fact that we can have a access to innovation and services in a much easier way compared to how we traditionally have accessed infrastructure in this industry. And for us right now is to talk about the vision where this industry is going. And it's not to talk about a stepwise change. It is to promote evolution and to not sit and wait to say that suddenly someone else will help me to modernize. It is a decision to modernize is a decision to modernize. If you decide to not do that, that's also a decision. And I think that's the mindset you need to have now, because the timing is important, because you need to mobilize your organization to do so. And that's where the industry is right now. What are the capabilities I need as an organization in order to mobilize modernization? And how do I create the case for me to do so? And as I alluded to in the introduction, I think that it's complicated. And I have a lot of we have a lot of discussions with the C-suite, with our clients, how you bring that case of modernization to the board for decision. And I think the first mantra is, yes, you can make a decision to modernize, but you can also make a decision to not modernize. And we did an interesting study together with Value Exchange, where we surveyed 300 post-trade institutions across market infrastructure, custodians, and FCMs. It was interesting to see that 78% of their investments went into BAU. So it's basically keeping legacy solutions going. So it was only 22 that was, so to say, going into investments. And it was less than, I think, 5% that went into data analytics and AI. So the transformation is that how do I unlock investments from these kind of the pot of how do I increase my 80% to be more to actually force that into modernization and new technology.
And it becomes a very interesting situation because people, one of the things I've noticed a lot most recently is, I mean, we talked about 20, 25 years ago, it was just automate and then you will save cost. It will make your life easier. You'll be better able to audit and so on. One thing I've noticed that is driving a lot of people's thinking about modernizing marketplace technology these days, Magnus, is the fact that actually this time around, it's not just about cutting costs. It's actually about making money. It's about being able to better exploit the assets you have in a multiplicity of different ways. Do you think that's a fair assertion?
That's very much so. And it's, I always try to ask the question, what is your cost of change? So if and I think that's traditionally is the biggest challenge for this industry, irrespectively where you are in the value chain, based on the fact that it's mission critical. We don't want to fail in the change, which means that we do a lot of testing and we test and we're not sure we test the right things, but we spend a lot of time on change. And that's why the cycle of change is so slow and painful. And I think that's our biggest challenge is how do I improve business agility as an organization? And that is not just about tech. It's also about our capability to manage that technology. So,
yeah, I mean, you hit on a very, very good point. So it's about how the business functions around the technology, because suddenly you can be given a series of business opportunities that are coming from your technology. I mean, I think of, well, a very much widely talked about one is obviously market data, which extends in almost an infinity of different ways, from creating and bunching new products, creating indexes and all sorts of things like that. But also there are so many opportunities, but if your business is not lined up to take advantage of that, it's going to be very, very difficult for you to do so.
No, and that's, I mean, if you monetize, everyone talks about they want to monetize the data assets, but that is not just that you need a business model. You also need to have a very structured approach to your data management framework. You need to build the cloud infrastructure and the whole delivery vehicle. And that's much easier today than it was 10 or 15 years ago with new technology. But still, you need to bring the confluence of business, technology, and deep understanding of the asset itself in order to realize those benefits. It's not just one component that's going to solve that problem.
Absolutely. That's a very good point indeed. And actually, talking about exploiting one particularly interesting point, we've got a great question here from Alexander Burgos. He is asking, Magnus, can you discuss how you're approaching new asset markets such as carbon?
Yes, that's a very good question. And that's an exciting asset class, because I think the more we invest and get that successful, the better the world's going to be. So it's an easy asset class to talk to. And certainly there are different instruments already available today to trade on listed markets, but there's also a lot of carbon-related asset classes that's there to help with funding new initiative for carbon removals, etc. So the way we're approaching this from I would say post-trade or issuance is to basically apply a digital asset mindset, but do that in a controlled environment. So basically run on the permission chain solution, but apply the opportunity that comes with smart contract logic to do so. So I think that carbon is a great example where we can innovate and experiment with technology to achieve those benefits, because it's a new asset class, but it's a strong interest to secure that this is an industry that works well, is compliant, and transparent.
And also, of course, is fundamentally interconnected to so many things, including going all the way back to the very beginning of your career when you were dealing with energy reorganization and deregulation in Scandinavia amongst the power countries. And we had a great conversation actually with your good colleague, Frederick Ekstrom, that must be 2 years back now. He was talking about his role within Puro Earth, where he's the chairman there, a Nasdaq subsidiary. Fascinating business, how it's going in so many ways. And that is interesting, you're talking about bringing the digital asset mindset to things, because I can't help but think that at the very end of when all's said and done, I'm not necessarily 100% convinced everything has to be on a blockchain, but I think the digital asset mindset of fractionalization, providing easier tradable assets, etc., providing the opportunity to have those priced in different currencies and so on, really are very, very interesting tenets which almost any marketplace can look to adopt, even if they don't end up deciding to go the full-fledged hog of going down a distributed ledger.
No, and I think the first kind of maturity level is, of course, to ensure that the issuance piece is working and that the description of the product is very clear to the one that's going to trade it. The second step of that is, of course, the whole custody piece of that. And how do you make that product available for trading? And I think that's where we are in the industry right now. It is the foundation of the definition and the actual issuance of it. And then the next phase now is how do you secure the custody piece of it, and how do you then transform that into a liquidity solution? So it's the good thing is that we have so much experience now from bringing new asset classes kind of globally to market. And we also had the whole innovation around Bitcoin and cryptocurrencies. So to kind of marry that and think about how we do that in a regulatory control context, it's amazing and exciting.
Yeah, it's very interesting because I've often said that Bitcoin itself, I never really thought was particularly the future, but it's like the Model T Ford, to go back to the analogy, with your current factory-based office with the Model A. I mean, the Model T Ford isn't the car that we want to drive today, 100 years later, but it is actually whatever you're going to take to drive home from the office, even if it's electric, 90% of its DNA is essentially the same as the Model T Ford. And that's certainly something which has been paved for us with the crypto marketplace. And I'm interested, therefore, I mean, how do you see the current growth in, say, things like AI and artificial intelligence? Where does that kind of meld into either the digital asset space or the established exchange space beyond surveillance that we've already talked about?
Yeah, I think we have, if we look through the whole kind of the Nasdaq corporate now, I think we have around 20 plus different advanced kind of AI initiatives going. And it's we divided into kind of in the product and on the business. And in the product means how we bring AI into our products in order to improve them. It can be automation, it can be how they work differently and around decision analysis or decision advice. And then when it comes to on the business, it is exactly the same as many other industries are doing now, is like, how can you apply Gen AI into how you operate as an organization in order to achieve the efficiencies that comes with tooling and co-pilots. So I think that's the way we're looking at it. It's how we can become better as operators and as organizations. And that is not just financial services or capital markets we can learn from. There we can learn from many other industries. And then, of course, it is how we bring it into product. And when you bring it into product, it's fundamentally other requirements. Then it's about how do you ensure that you can QA it? How do you ensure we have the regulatory guardrails around it? How can we replicate it to ensure we don't have bias in it or that it can start to hallucinate? And then we have the whole IP question around it also, to choose the right model and ensure you train it the right way. So I would say I'm very optimistic on that we will get a lot of products working well on the business in order to be more efficient. But when it comes to Gen AI in our products, I mean, we need to be very cautious in how we deploy that in order to kind of meet the regulatory context in which we operate. So from POC to product, it takes much longer, but it's I'm optimistic on that too. But I'm not optimistic that suddenly will transform this industry over the next 2 years. But if you look for it within the next 5 years, I think it will be different.
It strikes me, I mean, there are lots of lovely things that it can do to help make workflows easier, make suggestions, make things happen. The idea of it suddenly coming in and being a great all-seeing, all-powering engine that will manage to trade everything and do everything just strikes me as something that's going to be quite a long way away. And as you say, the hallucination risks, which we've seen writ large with, let's not mention them, certain major multinational scions of Silicon Valley recently have been very embarrassing. And those would also be, frankly, a horrific event for a highly regulated business such as Nasdaq or someone else, were something like that to happen. So it's understandable why you have the caution to try and move it forward. So when you look at these sorts of things and bring it all together, there's one thing we haven't really touched on directly in this discussion. You mentioned it a couple of times, and that is this amazing rise of retail. I mean, that is quite a transformative event. And I mean, you were saying actually just before we went on air, how big that was as a topic of discussion at somewhere like Boca Raton. It's an incredible change around how many people have been able to get access to the investment business who were previously either frozen out or not interested.
No, I agree with you. And if you look back, I mean, in different markets, I think retail participation is an important part in any market from a culture standpoint, because people should be interested in how they invest in for their retirement and basically. But I think what we've seen with the boom now, it's a bit about gamification, because it's a lot about options and it's a lot about derivatives. So maybe more short-term oriented in how the trading behavior is happening. So it's not about, okay, I'm investing for my retirement. I'm investing for short-term gains. But I think it's interesting to see in some markets and the growth of just number of participants and private persons that comes into the market on a weekly or a monthly basis. It's numbers that it's hard to imagine.
It's quite absolutely incredible. Yes, I mean, the one thing I would say is, I think 25 years ago or 30 years ago when I was first going to Boca Raton, we were probably calculating that we reckoned that the total number of retail investors in the world in futures and options was probably something like a very large football stadium, 100,000 people. Maybe it was a couple of those stadiums. And yet now you look at the largest FCMs who are connected, I mean, directly into Nasdaq markets. People that have got 2, 3, 4 million customers just within one brokerage unit that are trading options. And that's absolutely mind-boggling. And of course, also a great thing, because ultimately it's feeding through into the liquidity of the underlying stock market, which is making life better for everybody who's trying to invest, whether it's for the short or the long term.
No, and I think that's the way you need to view it, because sometimes, or maybe a couple of years ago, people said, retail, that's not real flow. But I think the retail participation now have been tested a couple of times around events, and people have been concerned that it's going to go away. But it's obviously here to stay, because it has now become a behavior of people to invest in. Either you can try crypto, or they can they can trade derivatives and or cash instrument. And I think for the broader economy, I think it's of course safer and sounder if you invest in derivatives in a proven and regulatory controlled environment. So.
Yeah, I agree with you. I mean, I think bringing that flow into a proven regulatory environment where even if they're sitting in one particular CCP pool, at the same time, they have the opportunity to help power all of the markets that are interconnected all the way around it, in the same way that energy links to electricity, links to carbon, and therefore options similarly linked to all these other things in the world. And particularly the US options markets, which are powered by Nasdaq technology at the moment, are simply sensational to see. I mean, how the volume of what they do every day, because 2 decades ago, 3 decades ago, people were arguing that we'd reached as many many shares as could have options, because there simply weren't enough shares that were big enough to manage the list. Whereas you look at it today and there's, wow, I think something like 10 times as many options being listed across the US exchanges alone as there were then, and certainly in Europe and Scandinavia and other places. There's a huge number of those things. So, I mean, as we bring this all together and we enter sort of the last 10 minutes of the show, I mean, it's modernizing markets and modernizing that market technology. It remains one of these huge challenges. I mean, I think the chief technology officer of the Australian Stock Exchange, the late Rory Collins, described it in 1987 as when he moved from floor to screen, it was much like changing the engines on a Boeing 747, except you're in midair and over the Andes or somewhere. And it feels very much like that today, because there's so many different pieces of structure. I mean, 20, 30 years ago, you had a matching engine, you had a data engine, you had all these things that sort of interrelated. But now the actual engineering is much more like a modern Formula One car, or so it feels to me, for the super liquid market, certainly. It needs about 6 or 7 people just to start the thing, which is the precise opposite of what we're used to with the car that sits in our garage, where we're used to waving a key fob at it and expecting it to warm the seat before we get into it in the morning.
No, and I think technology has helped to think differently about architecture too. And I mean, we typically have an enterprise architecture where we try to run the ultra low latency, so to say, components of our architecture on very optimized infrastructure. And then everything else that is around market control, surveillance, and data, we have transitioned that to cloud infrastructure, which basically allow us to get access to elasticity and data analytics tooling around that. So that didn't exist 10, 15, 20 years ago, but I mean, we started a journey around adopting AWS infrastructure 10 plus years ago. And now we're at the state where we can be, I would say, very smart on how we deploy our workloads based on the type of workload and the criticality and the mission criticality of that particular workload. And if I can also then connect to technology and what you said about around option strikes, we're deploying AI now to actually help us to ensure we have the right set of option strikes listed. Because if we just would list anything in the universe, it would create a massive message traffic that wouldn't be efficient. So this is an example where we deploy technology to be more precise on which strikes that should be listed in order to kind of maximize the user experience for the trading community. And I think this is how we need to be smarter going forward and not just flood the industry with data or message traffic. So once again, an example how modern technology can help us to be more efficient and also more cost optimized in the way we operate.
That's a very, very interesting insight over option strikes, because let's face it, even from, I can remember working on the floors of options exchanges, the biggest problem was updating hundreds of option strikes at a time, whether it was by open outcry or by early electronic trading or later electronic trading. That's really, really interesting. And I suppose that really brings us very elegantly, although I wish we could carry this conversation on for another hour or so, but I'm sure you've got dinner to go to, Magnus. It's fascinating. You mentioned the fact that within Nasdaq, you've got something like 10 or 15 years experience of using cloud infrastructure. You've got 10 or 15 years experience of using machine learning and AI infrastructure and all these things. So that leads me to the fascinating prospect of being in the pole position of modernizing markets, modernizing market structure, modernizing market technology. Magnus Haglind, where do you think the capital market revolution goes next?
Yeah, that's a super interesting question. And once again, I think it's about the timeline and the perspective. And I think that's why it's so exciting to look back and where we were 10 years ago and try to then predict where we're going to be 10 years from now. But certainly the whole operating environment, how do we pool liquidity together is going to look different. Cloud's going to be an underlying fabric of how we operate. And then we're going to see a confluence of how tokenization comes in, and we have conventional assets, the way we kind of operate our highly efficient kind of cash markets and bond markets today, to see how that then coexist and converge with a quick growth in tokenized assets too. So you're going to see a confluence, and that confluence is going to happen on cloud infrastructure. I think that the word we're going to remember and that we're going to strive for is interoperability. It's going to be interoperability across those ecosystems, and then interoperability across digital and, I would say, analog or conventional assets.
So, ladies and gentlemen, there you hear it from the head of Nasdaq's Marketplace Technology Division, Magnus Haglind, the EVP there. It's fascinating. If we were going to write a book about exchanges today, I think it wouldn't be Confusion de Confusiones, as the great Joseph de la Vega book was written about the Amsterdam Stock Exchange. It would be Confluence of Confluences. And indeed, if we were sitting there listening, whispering in the ear of a young man who's just an early graduate, and we all know we're talking about Dustin Hoffman here, these days they wouldn't be saying plastics. Good grief, no, certainly wouldn't be saying plastics, would they? They'd be saying interoperability. That's the place you need to be. This has been an absolutely fascinating discussion, Magnus. Thank you very, very much for joining us. Thank you to those of us who've been here with us today. Messi Times and Alexander Burgos asked questions. It's been such an easy conversation. The hour has passed magnificently. We are taking a week off for Easter. However, we've got an exciting guest for you to look forward to in 2 weeks' time. And that is, I do believe, going to be Tom Caldwell. We are going to be discussing exchanging investments with the man who at one point in time had the largest holding of New York Stock Exchange seats, or possibly the second largest holding. I may be correcting myself here, but certainly Tom Caldwell, a man who's made a pioneering investor across all of the world's exchanges as they were going electronic over the course of the past 25 years. Really, really looking forward to him. But for today, what a perfect Easter treat, ladies and gentlemen. I think Magnus is now going to rush off and deploy some AI and machine learning to work out how best to manage to hide the kids' Easter eggs in order to make them as difficult as possible so that he can have a nice long Easter break. Magnus, thank you very, very much. My name is Patrick L. Young. We will be back in 2 weeks' time. In the meantime, don't forget you can catch Exchange Invest every day except for Good Friday and Easter Monday. My name is Patrick L. Young. I wish you all a great week in life and markets, and we'll see you in 2 weeks' time for the next IPO vid. Thanks for watching.